Hey, what's up, everybody? Hope you guys are enjoying your Sunday afternoon for you guys in America, and hope you guys are enjoying your summer as well. Hope you've had awesome plans for this Sunday: family, friends, lake, beach, vacation, and hopefully it's going awesome. My name is Ruben Rodriguez from Tenacious Tribe, and here I am once again for another episode of our series of analyzing trading assets. The one I've been seeing today, that the order I received today was for Liquidity Services Inc. There's been a lot of demand for this stock online. People are interested, investors are interested. I have no clue why. I haven't seen any news whatsoever related to this stock. Normally I do rely on price action, technical analysis. That's the perspective I'm here to offer you guys. And let's cut a chit chat. Let's go. What do I see in liquidity services? First of all, first thing I saw is this is the exact kind of setup that I've trained myself to execute and to master perfectly. I've run the numbers for stocks like this. I've made massive backtesting. Improvements and all that. I mean, this is the sort of stuff I'm looking for when I'm trading. I'm momentum trend follower, long term trend follower on this time frame. This is the exact setup I'm looking for. The one thing I would exclude here is like this longer shadow. It's not something I typically like to see in one of my breakout candle, the breakout candle from the stocks I typically like to trade. But still, this is definitely a trade I would have taken back in 2011. Who was I trading back then? I was not though. I was still in school back then. I was in university back then. Otherwise, I'm pretty sure I would have traded LQDT and ripped. I would have ripped. I would exit. Yeah, I would exit at this candle here. Yeah. So at the opening of this one, this would be my trigger to exit the candle, to exit the trade, and this would lock me a profit of roughly 30.82% in 13 bars in 1 year. That's not fantastic, but that's the name of the game. Sometimes you win more, sometimes you win less, sometimes you lose. A lot of times you lose. The point is you gotta make sure that you don't have big losses, and your edge will manifest itself in the end if you keep on trading long enough, managing risk, manage position sizing. And I'm speaking as if this would have been a loss. This would not have been a loss. Um, so yeah, if you're curious about why do I prefer this sort of setups, I mean, a lot of reasons. If I have to be, I'd have to record a 2 hour, 3 hour, 5 hour, 10 hour video here to justify my favorite setup and tell you the reasons. But in short, I mean, when the stock is trading at all time highs, there's no one losing money. In theory, of course. There's no guy. I mean, this guy, for instance, there was someone who bought the stock here and was losing money all over the place. Pum, pum, pum. At this stage, this guy is ripped out. Nobody's in a trade. There's no one like who bought here. There's no overhead supply in the technical terms. There's no one who bought here and he's very keen on selling once the price arrived at this place. Um, there's no overhead supply. That's pretty much the reason I got here. It's very easy to backtest, also to manually backtest, which I prefer. Um, it's very good at catching FOMO stocks, which tend to return a lot on your equity, such as think about Bitcoin, think about Tesla. All these guys were giving investors or traders big chunks of money when this sort of setup emerged. Why do I prefer the first base? I mean, I run a back test of 5,000, 4,000 stocks, and the numbers showed me that these are the setups with the highest odds of locking up better rewards or better average rewards. And why is that? I have no definite answer. I read about it though in what was it? Peter Lynch or even yeah, I think it was Peter Lynch's. For instance, in the 2000s, I mean, it was very something very common for IPOs to quote down or mismatch the price of their recent issues, or just to put it in the market on sale, so that once it pick up the right value, which you're supposed to lift up the value of the stock, then it would pick up a lot of attention from the news media, and the more attention you got, the more investors you got, and the more buying pressure you got, and the more the price rises, and so on. Same follows for these ones. I mean, think about it. Stock making new all-time highs from media, CNBC, Bloomberg, all the attention and whatnot. That's why I love this setup so much, and I have migrated I've dedicated a lot of work into researching, improving this sort of setup, and I can consider myself a master of this setup nowadays. But enough of the past. We're here to analyze why people are interested in LQDT right now. And yeah, this bullish candle is very ostensible. First of all, what follows afterwards? We saw uptrend came to an end, and there was no transition to a ranging market afterwards. It was there was a lot of bearish power here. So it was a full transition, immediate transition to this downtrend. See, and we have this trend line. It's pretty much ostensible as a downtrend. Look, it has the red candles, very powerful. The bears here, until here, where we see like the bears losing power. Like, look at this bearish candle, bullish candle here, the green one, above the sizes of the previous ones. It's really marks a difference in the momentum here. As of this moment, you see that the bears are losing momentum. As of this candle, you never see again the candle of this size or of this size or of this size, this size. You see here that the bears start picking up, start losing pace, and it seems like their fuel to feed on the downtrend has come to an end. So reversal might be approaching. Then of course you see here the breakout of the 10 EMA, 200 EMA in the daily time frame, and this is like an objective signal that the downtrend has most likely come to an end. It keeps on going. Yeah, downtrend is done. So we are transitioning to a ranging market accumulation phase here, and yeah, and this is I like to see this, and then you have, when was it? Resistance, support, resistance, or supply area. Same, somewhere around here. Okay, so we got this gargantuan breakout. Size of the candle is also fantastic. It indicates a lot of bullish momentum here. There's a break of structure. Price was ranging. It was a ranging market since 2015, and back in December 2020, it broke out fully from this range. And this is an exquisite sign that an uptrend is just starting. Is just starting as of this moment. Yeah, confirm the uptrend. Price making new higher highs, higher lows. Breakout. Uptrend starts. Higher highs, higher lows. Yeah. Uptrend stopped right there. Got interrupted by the bear. Two conclusions here. One, this is the reason I prefer trading. I was telling you about this thing just a few minutes ago. This is the reason I prefer trading assets that are making all-time highs. This was a very strong candle. This is a very powerful movement. Don't have the volume. I don't even want to put the volume in. This is enough for me to see this was a very strong movement from the bulls. New uptrend is starting. Same for this candle after a small consolidation. Bull flag. even even a pennant. Well, another breakout is a bullish setup as well. But I mean, look at this upper wick. It went straight into resistance, straight into overhead supply. This is precisely the reason why I try to stay away from these sort of scenarios. As of here, there's no memory of who bought here or sold here. When you're trading here, although you have a very strong, we have very strong momentum candles, very strong, what appears to be very strong momentum uptrends getting started. There were buyers here. There were people here holding the stock, craving for a price to cut back. They were seeing red, 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 and they were craving for the price of stock to get back to this area for them to come back to break even. This could also be that's what started. It's one. This could also be like a psychological area, and where traders and investors, as falls from previous price action, were of the theory that this area was a psychological hurdle for the stock, and it was not worth more than 25. I don't care. I have no. I have. I do read it. I have an idea. I do read it. I like to read about it. I like to read about everything, but I rely mostly on price action, technical analysis, not fundamental. I mean, there could be also reasons for people to, for fundamental traders to believe that this stock was not priced at 25. So whenever it got back to 25, it was just sold because it was overvalued as per fundamental analysis standards, so to say. Okay, that's one. This is the reason why I prefer to trade this instead of this. And two, yeah, we have an uptrend, but we also have a bear market as of the end of 2021. And the, this lesson goes to say that no matter the fact that it was in a strong this market was in a strong uptrend, the strength of the broader market, or the trend of the broader market, is what happens to define the dominant trend on these stocks. There are exceptions, of course, like in commodities, which are just getting bearish now. But I mean, the bulk of stocks, no matter which stage they were at, when the bear market on the S&P 500 and Nasdaq popped up, these stocks were dragged, like all of them. And that's something else you have to consider in order to prune your system, because that's something you have to consider. This was a mistake I was doing back in the beginning of my career, thinking that every stock was an individual, was like detached from the market at like its own pace. In some cases, it does. But I mean, my results, like, oof, they got so much better, so much refined when I started realizing that they're like sweet spots where of the broader market, where you have to enter, and where you have to refrain from enter. Most importantly, and this is a good example of that. This was in a very good momentum. These bullish candles that are exactly what the momentum trader wants to see. But I wouldn't say 100% exactly because of these upper shadows. I prefer Mazurobus, but the display was very good. But still, you got a bear market, boom, it goes anyways. Um, Moving on. So this was a very small downtrend. I wouldn't even call it downtrend in the multi-time frame. This was for sure. But yeah, once again, support here, resistance here, new support. Look at how this area was respected so perfectly as a new support once there was a breakout from this previous resistance. And yeah, this candle must be the reason why liquidity services is picking up so much attention lately. Um, Very big sign of bullish presence here. Technical analysis working perfectly once again. See here. So previous resistance from the ranging market with a strong breakout from this previous resistance. Technical analysis say that the previous resistance tends to become new support. Um, Bull market, small bear market, and look what happens when the price gets back into the previous support area, previous resistance area. It's automatically rendered as a new support. This was a clue of death thesis already. So it's a good indication signal. I won't call this an hammer, but I mean this is this lower shadow could give us some hints as to what was the dominant presence in this area, whether Bulls or Bears, and Bulls it was, yeah. So I mean, what else do I have to add about this concept? Whoever thought this stock was cheap or was valuable to buy at this level is not thinking different when the price gets back to this level. Say this was bananas, and this guy thought bananas were perfect at 12 euros, 11.5 euros. Although it goes back, when it gets back to 12 euros, 11.5 euros, there he goes, he buys again, and it's a no-brainer. So clearly, the big money manager who bought here, or the big money managers who bought here, still have signs to believe, or still the reasons to believe that it's still worth buying this stock at this level, and whichever they are. And there enters, of course, their personal judgments, fundamental analysis, economical view, macro analysis, perspective, all that. Now, with all this information inside, okay, I'll definitely in a longer term uptrend, price trading above the not clear. It's a setup I don't like. Um, but I mean, the price is definitely making new higher highs, higher lows on the longer time horizon. What would I do here, trading wise? As advised, I would not dare trading this stock on the downside because these two candles are the the phase of the market on the longer time horizon is just telling us that we should have a long bias and look for long entries. We should trade the trends in short, and this is not a downtrend anymore, not a ranging market as of this moment. Price erupted and started an uptrend. Yeah, there was a bear market here, but clearly clearly the bulls don't care anymore. They're buying here. I would say it's just I would not look for short trades here. That would not be my bias. However, I would not also be very much inclined to look for bullish trends. Right? Look at happened here when the price hit this $25 level. Here, rejected. Plus, we're in a bear market right now. So there's not much capital floating around and begging investors to put it in liquidity services Inc. Apparently, some of it, yes, but I mean, is it enough to fuel like a longer term uptrend? Is it enough for the price to come here and pierce this hurdle? If it is enough for the price to come here, pierce this hurdle, and pierce this hurdle. If it is not, is price right now at a point where it would offer you a nice risk reward perspective or possibility? Also not. Look at this. You'd have to put like your stop loss below the support area, and you have to target the next place where the bears might be. And the bears are here. This is telling you where they are. This and this. They're here. I don't know how many they are, but they're here. I don't know if this will hold a resistance, but they're here. And as a trader, I like to have the least amount of obstacles possible. So this is definitely not the trade I would take as well. And that's it. I mean I like very much this chart because it has a lot of examples of what works or what doesn't, or uh, trend phase, trend lines, EMAs, value zones, support and resistance concepts. It's a very rich chart. Overhead supply, supply and demand areas, chart patterns. It's a very rich chart, I'd say, but I would just refrain from trading it. I don't think it offers any good risk to reward, fantastic setup. And that's it, guys. If you guys differ from my opinion, just feel free to. There are a lot of ways of trading, not just a monthly, weekly. I mean, there's a lot of ways of trading. This is a microscopical view, of course. And if you guys have a divergent opinion, if you guys want to add something up, just feel free to reach me out, comment, comment, get in touch. And that's it. Enjoy the rest of your Sunday, and speak to you later tomorrow.